Well, the real problem with Bitcoin, the way I look at it, we're in the end of a debt cycle. Many people out there, I guess the color or the perspective they give you really hinges on how they feel we are in the debt cycle.
You see a history of super cycles and then downtrends.
When you look at something like an organism, you know, it has breathing, right? It has this kind of rhythmic activity, right?
Hey, everybody, and welcome to this week's episode of Coin Talk. We have a very exciting topic. We're going to be discussing the Bitcoin super cycle. Are we still going up? Is it over? Is the bear market around the corner? I want to get some professional opinions here. So we have fantastic guests today. Miko, who is one of our advisors to Celsius. Miko, if you would tell us a little bit about yourself and what it's like to be an advisor.
Yeah, absolutely. So just a little bit about myself. I'm a general partner with the venture firm Gumi Cryptos Capital. We actually are an investor in Celsius. I've been an advisor to Celsius since 2017. So, what it's like to be an advisor, it's actually quite gratifying. To me, I'm very passionate about the benefits of blockchain technology, and I really, it's just wonderful to see the magnitude of benefits delivered to users through Celsius. So, it's exciting and it's a great project, and so it's really fun for me.
Fantastic! Thank you for being here today. We also have Dr. John Cruz. How are you doing today, John?
Pretty good. How are you?
Doing very well. How did we meet up with you, and tell us a little bit of your history with Celsius?
Actually, I met up with Josh. Josh used to be in Clubhouse with me in a morning session called Crypto and Coffee. And he started to hear my macroeconomic takes, not only on fiat, on cryptocurrency, but also Bitcoin. And he asked me to come and do some of these coin talks with you guys. And I was free, and I'm here.
Fantastic. Thank you for spending some time with us. And Josh, how are you, sir?
Hi, everyone. I am a community manager at Celsius, and you guys know me. I go by Josh Huddle on Twitter, and I'm really excited for this subject in particular. I have my own opinions as well. Happy to be here.
Yes. Fantastic. So let's get right into it. Over the course of Bitcoin, if you look at the 12-year chart, you see a history of super cycles and then downtrends, a large run up and a large run down. And that's kind of how it's played out. And some people see that in 4-year cycles. Some people see it in 2-year cycles, or some people just see it as a series of ups and downs, that have no consistency. So I wanted to ask Miko, you've been in this space for a long time. How do you see the cycle going forward? Do you think it's matured to something different, or do you expect a similar repeat of the last 12 years?
I mean, I think to me, the idea of a cycle, I think, is logical, right? Because, when you look at something like an organism, it has breathing, right? It has this kind of rhythmic activity, right? And as you can see, this idea of the cycle makes sense, because when you think about it, right, you can have a bull run, and people talk about the bull getting exhausted, so logically, a lot of this makes sense with respect to kind of understanding buy and sell pressures within all of these different organizations and individuals, right? And whales and everything else, right? So when you think about buy and sell pressures, the idea of a cycle is akin to the sort of macroorganismic sort of rhythm, right? Almost like breathing, right? But I would say this, right, which is the organism is mutating, right? So that's a factor. And I think the other mindset that I like to inject is that I call Bitcoin the third Keynesian animal spirit, right? Which is there's a bull and there's a bear, right? And the third animal spirit is the honey badger, right? So in a sense, there's kind of an intrinsically contrarian quality to Bitcoin price action, that I think is really designed to throw people off, right? So in any kind of so I think those are the two countervailing mindsets that I have, right? And then coming all the way back down to the base layer, I think obviously we're going to hear a lot of really exciting analysis, probably from John, around sort of the, geopolitical and macroeconomic thesis, right? But so obviously that's a baseline. But coming from where I come from in venture capital, I'm excited about just builders, right? Just this entire kind of blockchain advantaged ecosystem, to which I see Bitcoin as the central bank. So in a sense, I think Bitcoin has an economy that it's fueling, and it's really, there's an entire relationship between those. So I don't want to go too hard, but definitely want to just inject these different lenses as an introductory frame.
Sure. We see all the innovation going towards Bitcoin, right? It's leaving all these other spaces, and human innovation is extremely powerful, and we tend to make things better over time, and especially when there's so much focus on it. And it's one of the biggest issues in the world, money. It is the liquidity that puts us all together. So I wanted to move over to Dr. John and say, how does the kind of technical development or the social change around Bitcoin commingle with the macroeconomics and the printing of money and the new kind of fiscal policy and monetary policy we've seen? Bitcoin has always lived in a world where we're printing money, right? It wasn't around in the gold standard. But how has more recent developments affected what the cycle could be?
Well, the real problem with Bitcoin, the way I look at it, we're in the end of a debt cycle. Many people out there, I guess the color or the perspective they give you really hinges on how they feel we are in the debt cycle. I'm in the camp where I think we're closer to the end than most other people believe. They think that we can kick the can down the road. The problem right now that I see with Bitcoin is that it's still a highly correlated asset to the general market. So when the market goes down, Bitcoin goes down. And one of the greatest things that I think is going to fuel some of the things that Miko had talked about earlier is not actually Bitcoin, the coin or the asset. It's actually going to be the network, the payment rails. I think some of the things that's being done on Lightning on layer 2, it's kind of the same argument you get from Google. The more web pages we have, the better the Google's network's going to be worth. Same thing with YouTube. And I think, unfortunately, that most of the market players, especially the guys out in Silicon Valley, I don't think they really get that perspective yet. I still think they're back in 2017. They're looking at coins. They're looking at, the value of the coin. And I think the macroeconomic thing is actually the reason why I don't think we're going to get a super cycle. I actually think that this cycle, beginning of this year, 6 months probably before the halving, as Josh and I have talked, I always thought we'd be right around 100,000 when we got to the end of 2021. I still think that we'll be higher than where we are now, but I'm not even convinced that we're going to make it to 100,000, and I don't think that's a bad thing. And the reason why is I think this coming month, with the things going on both in China, the debt ceiling argument, the fact that we're going to be spending between $3 and $6 trillion more when we have $30 trillion in debt. When you hear Yellen's comments, Powell's comments, and then the White House releases something this week saying that they want to start to tax unrealized gains, you begin to realize that there's a lot of pushback to price action going down the road. Ultimately, do I think the trading perspective probably doesn't like to hear this? They like the volatility, they like things going up and down. But I think overall, Bitcoin's price is going to continue its ascent upward. I just don't believe we're going to have a blow off top like we did in 13 or 17.
Interesting take. Josh, I saw you saw something you wanted to reply to.
There's just so many things that you guys are talking about. It's hard to go after either one. I do agree with Dr. Cruz that the utility is going to play a big role, but also like we're seeing like with Twitter, like launching their own like lightning nodes or whatever, and like getting people to tip. It's in like companies' best interest to set up a lightning node and eventually get paid using Bitcoin.
Yeah, I wonder, that with the amount of debt that we're talking about, is it really possible to raise interest rates? I don't think so. I think, bond rates are where they are because they have to be. But talking more on the institutional side, 2017, it was just a rumor that institutions were going to get involved. And now we've definitely matured a lot more on that side. And I wanted to ask Miko, like, on the investment space, are you seeing that maturation go through capital markets? Are you seeing major companies make major investments in crypto?
Yeah, I mean, we definitely are seeing kind of a degree of seriousness and, a number of players. Obviously, we're seeing involvement, that through kind of fairly traditional mechanisms, right? Like, we're seeing mechanisms like GBTC, and so these are really fairly conventional, but you're seeing obviously folks like JP Morgan, these types of organizations, getting more involved through these kind of traditional instruments. I think recently Gary Gensler mentioned that he would be open to sort of a Bitcoin futures based ETF. So I think that could be potentially a catalyst. Obviously, the regulatory vector is going to be, I think, interesting, right? Because in a way, there's sort of a mood from Gensler that he wants to kind of put his hands on it. He wants to put his fingerprint on it, in a sense, like, he's going to try to put his stamp on this thing. And I think that's a external vector as well. I think regulatory clarity generally tends to help with institutional adoption. So, I think those are going to be things to watch.
Miko, do you think that there's going to be a Bitcoin ETF by the end of this year, or do you think that's something that we'll see next year?
I mean, the SEC has been really, really tremendous at kicking that can down the road. Like so I wouldn't be holding my breath.
Well, they have good reason, right? You see, like, whenever there's a big move in Bitcoin, all these exchanges get locked up. Like you can't get into them. They freeze up. So maybe they're right. Maybe there is some manipulation and stuff in here, and it's not ready for prime time yet.
Like if you talk to Commissioner Giancarlo, he talks. This is CFTC stuff, but he talks about how the emergence of CME and trading in Chicago, that kind of regulated Bitcoin action actually was a catalyst for price action, right? So these guys are watching. Regulators are interested in timing. They're interested in politics. They're interested in these kinds of topics, right? So in a sense, I don't think it's a bit like training a horse. There's sort of a carrot and a stick element that they're trying to deploy, and timing is important to them as well.
Mm-hmm. Yeah, this is, in the grand scheme of the world, this Bitcoin has not been around very long. And, the pace of regulation takes time. And I think they want more maturation of these markets. But we see other countries bringing these types of financial products. We just saw Canada launch another ETF type product last week. So I think it's a matter of time, right? I agree that you don't hold your breath and expect it to come in the next couple of months, but eventually it will be here. A question I had for Dr. Cruz. We see the regulation take place. We see this market mature. But let's say this is not the end of the cycle, but just the beginning. And, Bitcoin does go to hundreds of thousands of dollars. How is that going to affect the world and affect people and affect regulators' view of Bitcoin? I mean, if we do see this really go to the moon, if you will, is this going to change the perspective of how people see Bitcoin today?
Depends who you're talking about. If you're talking about a trader, you're talking about a regular investor, or say you're talking about an institution. To me, I think regulation, going back to what you guys were just talking about, I think regulation on the Bitcoin side is actually not a big deal. I think regulation Gensler's been pretty clear. He's going after the altcoins. He's going after people talking about securities. I think the real big issue, to be honest with you, for institutions that we haven't talked about yet, is actually accounting standards, about how they have to mark things down. I think the accounting standards have to be fixed before you can get Fortune 500 companies doing what Michael Saylor's already done, because it's a huge problem. right now for some CFOs to be okay with having no clarity in terms of how they handle the asset on their balance sheet, to me, that's actually a far bigger deal than even the ETF story. I think the ETF story, I don't believe we're going to see anything until Gensler gets his way one way or the other. And I think Gensler's been pretty clear that he wants Congress to actually rewrite some of the 1930s Securities Act. And I think we've seen pushback from, Toomey especially, where he said, look, I think the 1930s law is already good enough. Then the other big macro view that you have to bring into this, we're seeing it unfold actually today, because we have the argument about the debt ceiling. And that's the first foray into the midterm elections in 2022. And I will tell you, I personally think for the entire market, both Bitcoin and crypto, do I think that the 2022 election has huge implications? Do I think the 5 seats that are up on the Fed, these are all big deals that are going to keep a cap on the number going forward? Yeah, I actually do. I don't think we're going to get as fast as you think. But the interesting part is the greatest macro picture, what you said earlier, Zach, to Josh, I don't think you can stop the money printer in the United States considering where we're at. If you do any taper at all, the Fed does anything, the markets are going to go down 5-10%. We saw it early in Powell's cycle. We're seeing it even now. We saw just what happened with the 10-year note, a couple of days ago when they just mentioned tapering. So I think if you ask me to distill down what we're really talking about, if you want a super cycle to develop in Bitcoin, the fastest way for you to do it is get rid of Powell, put Lyle Brainerd in charge of the Fed. That basically makes the Brookings Institute on a fast path for us to get UBI to turn us as socialist as we can be. That's how I think you can get to Bitcoin the fastest, because you're going to see money fly out of bonds into Bitcoin really fast.
I wanted to pivot real quick because there is really big macro things happening. We now have El Salvador. We have other countries positioning themselves to possibly make Bitcoin an acceptable currency in their country. So we saw, I guess, one country this year. Maybe next year we see 3 countries. Maybe the year after that we see 5 more countries. Do you see that trend picking up speed?
Josh, I don't know if you know this because you and I haven't talked offline, but I went to El Salvador 2 weeks before September 7th, which is when the currency went live, and I was there. And I'm currently in the process of buying property down there for many of the reasons that we're talking about now. And do I believe that they offer a huge opportunity? Yeah. I mean, guys, think about this. This is a small country with 8.5 million people. They announced that at the Bitcoin meeting in early June with Jack Mallers' help that they were going to launch this. Who would have thought in a million years that a third world country to get 40% of their population through the Chivo wallet on the Bitcoin network already? So when people say that things can't happen fast, he just onboarded probably 4 million people in the last 3 or 4 weeks. If you don't think that's a big effect, and I'm paying attention to what's going on in Guatemala now because Bukele's political party is really big in Guatemala. Panama is very close, actually, on Ethereum, and going on in Paraguay. Same thing going on in Argentina. And I will tell you, from a macro standpoint, you get a G20 country that signs on to Bitcoin, like Argentina, dude, that could be a huge game changer, in 2022, 2023, where we could lose the classic halving cycle that we're all talking about. Excuse me. My opinion, guys, is that I don't think that the institutions are absolutely the biggest thing. I think, sovereign wealth funds from these countries, dude, that is a wall of cash that dwarfs some of the institutions. And if that money can come into this market, then I think your guys' theories, I'd actually tell you that Dan Held may be lower on the scale. You may be at millions of dollars of coins by the time Biden gets out of the White House.
And I mean, there is still, I mean, Bitcoin represents such a small fraction of total assets around the world. And I want to ask Miko, from the investment side, do you see companies like or countries like El Salvador as a place to start moving capital because they've come out to be explicitly Bitcoin friendly and want to invite that there, making favorable tax laws and business environments?
I mean, obviously, we're watching that situation very closely. I definitely concur with, Dr. Cruz that this is a very logical catalyst for these kinds of countries, right? Because, if you really kind of, in a sense, it's such a, like, if you think about the social network of Bitcoin, which is what the Winklevoss twins call it, the social network is a protocol, and it's a social protocol, right? And the social protocol is you buy and hodl, I buy and hodl, and we both get rich, right? That's the protocol, right? And in the sense that a protocol is an agreement, right, between parties, right? So it's an agreement, and obviously it's an agreement to do something a certain way, right? So if you reason about it that way, right, then I think a lot of nations can actually look at Bitcoin the way, it sort of forms the Thomas Schelling point type of game, and so you get coordination without explicit communication. Although I guess, given that, Bukele's party is kind of present in a lot of Latin American countries, there may actually be explicit coordination, right? So, I think the thing that I think to watch that's really interesting is that, if you think about one of the ways to reason about the expansion of the Bitcoin price action is actually this 5 orders of magnitude correlation with the number of users. Now, the number of users of Bitcoin is a little bit opaque, right? But I do think that there are on-chain mechanisms like wallet counts and things that give you a good picture, right? So, one of the things that Dan Moorhead from Pantera has pointed out is that, over 5 orders of magnitude, we've seen correlation, between Bitcoin price and the number of wallets. And I think his view is that that caps out, in the range of 700,000 per Bitcoin, where you end up with kind of almost all the users that are currently on the internet in some range of around 4 billion users, right? So, and most of them mobile, by the way. So these are lenses. I do think it's certainly possible for it to go higher if you have lots of central banks using it as a reserve asset, but it's an interesting observation so far, certainly.
Yeah, and I wanted to ask about when it comes to bonds. Bonds used to be a safe way to save money, or used to be 60-40% of your portfolio. That was a very traditional investment thesis for quite a while. But now they've become useless, to someone that's trying to save money. And it's only used for market operations, right? In the Fed, and a lot of things that take place there. But, it would be silly for me to buy a bond because the rate of return is so low that inflation is certainly going to, make me lose on that. So I wanted to ask, if only the, countries and large funds and maybe pension funds are using bonds, is that going to cause a move out of bonds kind of from the bottom up into other assets like Bitcoin, and then that also be a tailwind to push the price up over the medium and long term?
I think that's the number one driver. And the reason why is all the guys, I'm older than all of you guys, and I've lived through seeing the bond market at 19% and come all the way down to 0%. It was a great time to own bonds, for majority part of my life. Right now, the guys that have made the most money, like Gunlatch, Dahlia, Paul Tudor Jones, all of them basically have come out this year and said, if you own a bond, you actually need to have a CAT scan of your brain because it's clear you're not thinking well. And it's pretty obvious. People know it. But here's the irony, Zach, is that some of these corporations, some of these people, like insurance companies, have to own bonds because of their corporate governance. So the big thing is, when are we going to start seeing that? How many more real negative yielding interest rates are these guys going to tolerate before this happens? And guess what? Who's driving that? That's actually the Fed. And what we just said earlier, the Fed is boxed in. We know what they have to do. Now it really becomes an issue of timing. It's actually just like circadian biology when Nico was talking before about the organism. The true answer is Bitcoin is an evolution, but you have to understand the environment that it's in right now. And the evolution that it's in is in an environment that's wholly becoming chaotic. And it's going to push assets. Like in the early days of Bitcoin, everybody thought, oh, it would come out of gold. It's not going to come out of gold. In fact, I would even say if this thing that's going on in China now really ever manifests, which I don't think it's going to, but if you had a credit crunch somewhere in the world, dude, that credit crunch is going to affect the bond market everywhere in the world. Why? Because they're all correlated. That money will come out. The question that I think the audience is going to want to know, and your guys' opinion, when does it happen? I'd say probably of all the guys on this stage, I'm the one that thinks it's going to happen way sooner than everybody else.
Miko, any reply to that?
Yeah, I mean, for me, it's market timing is obviously very, very opaque and complex, right? I'm a subscriber to complexity theory and a model called self-organized criticality, which models things like avalanches, right? So in a sense, when you look at systems that approximate a self-organized criticality, you do end up with this beautiful power law distribution of avalanche sizes, right? So that when you talk about things like systemic collapses, right, the timings actually tend to be extremely sensitive, right? So, but the thing that you do have to conjecture is that they are inevitable, right? So, in a sense, when you look at markets, especially free markets, they do tend to approximate these types of systems, right? So the question becomes, how long can the current mindset of modern monetary theory hold up, and I think that right now in the kind of COVID era, people are kind of following the quote unquote lead of Bank of Japan, right? So Bank of Japan has been kind of building up this ridiculous balance sheet, and I think the mood has been across these larger economies, kind of this mood has kind of been like, why, it's almost like looking at a human and saying, well, why isn't that guy dead yet? Right. Why is that guy still breathing? And then after a while, after having that experience, then people start to think, oh, well, let's just all imitate that. Like, let's all print as much as money as possible because, that guy didn't die. Right. So it's in a way, I think it's sort of there isn't a lot of political will to do anything other than print more money. So, it's not a great thing, but it just seems to be what the kind of loop that we're in. I'd love to hear some commentary about that.
I think everything that you just said about avalanches goes all the way back to the father of information theory, which is Claude Shannon. And Claude Shannon, if you look at his work, you guys know that I'm a neurosurgeon, I'm a biologist, so I'm really a big fan of things that are tied to the second law of thermodynamics. The guy that came up with that is Boltzmann. And what's the ultimate equation that he came up with is for entropy. Entropy is all about chaos. Well, it turns out that Claude Shannon also had the same idea when he looked at information theory and how information is codified in terms of how is the fidelity of the signal have the less amount of noise. The equation he came up with looks identical to Boltzmann's equation. So what you need to realize is that when you're in a system like we are right now that is totally an information-based economy, when you start to see all the different things that central bankers all over the world did, you can use Japan, but Japan is not like the United States. But Japan balance sheet looks terrible. The European balance sheet looks terrible. Look what's going on in China right now. I mean, they're 300% debt to GDP, but what are they doing? They're deflating their own bubbles. They're deflating Evergrande. They're deflating the Bitcoin miners. They're doing it on purpose. Why? To buy more time to kick the can down the road. The key question is, what will the United States do? Because since they're the global reserve currency, I think the real big issue is because the United States is so levered and is so in such a tight spot that it's going to take something outside of this paradigm to punch them in the mouth that actually is going to shake the entire issue. Do I think it's going to be in the credit markets? Do I think it's going to be credit default swaps? Do I think it's going to be in the bond market? If I'm in Vegas with you guys right now, I'm putting my money on that.
At the same time, to kind of look at the flip side of this, I think we want governments to buy as much time as possible and try to stem this off and fight this off, because quite frankly, I don't think the cryptocurrency realm is ready for a mass exodus of the legacy system into it. It would probably collapse itself if everybody ran for the exit. So yeah, let's let the governments print for as long as possible and drag this out for a really long time, so that crypto is finally ready to onboard everybody, at the later end of this decade or early 2030s. Zach, I'll turn it over to you because our session is running tight.
Yeah, no, a really fascinating conversation. I'll give Miko the last word here. Close us out with some wisdom. Go ahead, Miko.
Yeah, I mean, the thing that makes me sort of kind of a hyperbole here is really kind of the builders. So for me, when I see these builders and I see what's being built, I get excited, right? So whether the market cycle goes up, the builders are building technology, and I think that the note that you sounded just a moment ago of this idea that all the infrastructure isn't ready. Like I agree with you. I think actually the applications aren't ready. There's a lot of stuff that needs to be built, in order to make this sufficient to carry the weight of the world economy. So, it's not ready. It's still early days. We're still a couple trillion in value across the whole shoot and match, not just Bitcoin. So I think that, we've got a ways to go. So I think the old systems have already kind of failed, but hopefully we can keep kicking the can down the road and in make believe land for a little bit longer while the new systems kind of come online.
Before we go, I'd love to hear where you think we top at and when. Where do you think this super cycle takes us?
Yeah, I'm really I have no comment on market timing, but I'm happy to let someone else take that.
Sure, Dr. Cruz.
73,000 by November 15th.
All right,
awesome.
That's that. So thank you everyone for being here today. It was a really great conversation. Miko, John, Josh, and the audience here. We will see you all next time on Coin Talks.
Bye, guys.
Thanks a lot.